Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 31st, 2025, and we're diving into the latest earnings report from RBC Bearings, a leading manufacturer in the aerospace, defense, and industrial sectors. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. RBC Bearings has just released their fiscal second quarter 2026 results, and there's a lot to unpack, from impressive sales growth to strategic acquisitions.
Revenue and profitability overview. Let's start with the top line. RBC Bearings reported net sales of $455.3 million for the second quarter, marking a 14.4% increase over last year. John, what are the key drivers behind this growth?
The significant growth in net sales is primarily driven by the aerospace defense segment, which saw a remarkable 38.8% increase. This is indicative of strong demand in these markets. The industrial segment also contributed, albeit modestly, with a 0.7% growth. Additionally, the acquisition of VACO added $24.7 million to the net sales this quarter.
And how about profitability?
RBC Bearings achieved an adjusted gross margin of 44.9%, up from 43.7% last year. This improvement reflects their effective cost management and operational efficiencies, particularly in the high-demand aerospace and defense sectors.
EPS performance and analyst expectations. Now let's talk about earnings per share. RBC Bearings reported an adjusted EPS of $2.88, surpassing the forecasted $2.59 from a survey of 5 analysts. John, what does this tell us?
This is a significant beat, indicating that RBC Bearings is not only meeting but exceeding market expectations. The adjusted EPS of $2.88 reflects strong operational performance and effective cost management, which have translated into higher profitability for the company.
Operational efficiencies and future outlook. RBC Bearings has also shown impressive operational efficiencies. Can you elaborate on their operating income and cash flow performance?
Absolutely. The company reported an adjusted operating income of $105, a 21.2% increase from last year. This is a testament to their operational efficiencies and strategic cost management. Moreover, their free cash flow surged to $71.7 million, highlighting their ability to convert operating profits into cash effectively.
And looking ahead, what can we expect from RBC Bearings?
The company has a robust backlog of $1.6 billion, which sets a strong foundation for future growth. For the third quarter, they anticipate net sales between $454 million and $462 million, reflecting continued demand in their core markets.
CEO insights and strategic initiatives. Dr. Michael J. Hartnett, the CEO, made some insightful comments about the company's performance. What did he highlight?
Dr. Hartnett emphasized the high standard of performance achieved this quarter, driven by unprecedented demand in their core markets. He also mentioned the strategic acquisition of VACO, which has bolstered their market position, particularly in aerospace and defense. Additionally, the company has maintained SG&A expenses at 17.0% of net sales, showcasing their efficiency in managing operational costs.
Key takeaways. In summary, RBC Bearings has delivered a strong performance this quarter with significant sales growth, a beat on EPS expectations, and robust cash flow. Their strategic initiatives and market expansion efforts are clearly paying off. John, any final thoughts on their investment prospects?
RBC Bearings is well positioned for continued growth, especially with their strong backlog and strategic acquisitions. Investors should keep an eye on their performance in the aerospace and defense sectors, which are driving much of their growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on RBC Bearings' performance in the comments below.